Indian Stock Market Outlook July 2024. Trade deal impact and sector analysis. Will bull run continue? Market outlook. Trade negotiations set to influence future movements. The current reading suggests that a significant rise in the market from its present swing reading of 44 is not particularly promising. Hello, fellow investor. This past week, Indian stock markets experienced a slight decline as they braced for the impending U.S. tariff deadline on July 9th. The Nifty 50 index fell by 0.68%, closing at 25,461. Notably, the small-cap index fared better, advancing by nearly 1%, while the mid-cap index saw an increase of 0.6%. In terms of investment activity, foreign institutional investors, FIIs, reversed their earlier buying trend after 2 weeks, selling shares worth 6,604.56 rupees crore. This is a notable shift, especially as domestic institutional investors, DIIs, have maintained their purchasing habits for the 11th consecutive week. From a sector perspective, the Realty Index took a dip of 2%, followed closely by a 0.7% decline in the Bank Index, while the fast-moving consumer goods, FMCG, sector also saw a similar decrease of 0.7%. In contrast, there were positive movements in consumer durables, which jumped by 2.7%. Healthcare and public sector banks both increased by 2%, while IT and media sectors also posted gains close to 1%. While Indian markets faced some obstacles, their U.S. counterparts experienced a surge. The S&P 500 and the Nasdaq Composite hit record highs during the week, buoyed by the Senate's recent passage of Trump's reconciliation bill. As we head toward the July 9th tariff deadline, marking the end of a 90-day pause on reciprocal tariffs, nervousness has crept into both European and Asian markets, leading many to take profits in anticipation of potential volatility. To get a clearer picture, check out the chart below, detailing the performance of various indices. Expect market movements as trade discussions unfold. After 2 weeks of upward momentum, the Nifty closed this week on a slightly negative note. While this pullback is modest, it could signal the end of that upward trajectory. However, the most negative outcome could see a drop toward the 20-day moving average, DMA, around 25,160. Alternatively, if the upward trend persists, we could witness new all-time highs as long as the market continues to create higher peaks and higher troughs. Interestingly, FIs have been leaning towards short positions, adding to their shorts at every dip since March. This week alone, they increased their short positions by nearly 30,000 contracts, suggesting substantial potential for short covering as we enter wave 3 of an impulse. This overall trend indicates that there is a gradual reduction in short positions. In May, when the market stagnated, the peak of shorts hit 106,000 contracts. Last week saw 70,000 of these shorts closed by expiration. This week, however, 30,000 were reinstated, even as the market has generally shown a pattern of making higher lows. Consequently, what we are witnessing is a slow upward trend coupled with ongoing short covering, illustrating a classic tug-of-war between bulls and bears. Essential participation from domestic investors. Domestic institutional investors, DIIs, play a crucial role in the market as well. They continue to hold significant long positions in index futures. While they are gradually offloading some of their positions, they tend to repurchase during market dips, showcasing their commitment to a positive market outlook through this sustained upward trend. What's striking is that DIIs have not liquidated their holdings, opting instead to ride the wave, thus marking an unprecedented period spent above crucial resistance levels. At present, swing readings have reached a pivotal point, currently at 44. This number, while it indicates a minor correction, does not come across as overly sold out in historical context. In fact, small corrections have often pushed swing readings below 40 or even down to 30, even in non-extreme cases of overselling. Therefore, the chance of the market rebounding significantly from this swing reading of 44 remains relatively minimal. However, following a week of correction, we may be approaching the end of this phase. This scenario could present a unique opportunity. Should the market rise even with a higher swing reading, It suggests that stocks are not consistently climbing, but they are also not plummeting. Asterisco asterisco sector dynamics asterisco asterisco. Nifty 50 performance asterisk the benchmark index closed down 0.69% this week, concluding at 25,461. Indices overview weekly timing. Weakening segment asterisk Nifty Financial Services and Nifty Private Bank continue to show weak momentum and relative strength. Lagging index asterisk early signs of improvement in Nifty Pharma are visible, with its momentum witnessing a slight uptick this week. However, Nifty FMCG remains on a downward trend, lacking signs of recovery. Improving position asterisk sectors like Nifty IT, Nifty Realty, and Nifty Metal are gaining both momentum and relative strength. The Nifty MNC is also increasing its standing against the benchmark index. Notably, the Nifty Consumer Durable Index shows significant momentum and relative strength improvement. Yet, Nifty Auto and Nifty Energy reveal declining momentum trends, with Nifty Energy possibly entering the leading quadrant in the following week, though softening momentum raises concerns. Leading sector asterisk the momentum for indices such as Nifty PSE, PSU Banks, Infrastructure, Oil and Gas, and Nifty Infra has stabilized, with relative strength improving this week, a promising sign of recovery. Indices overview, daily timing. Weakening segment asterisk the Nifty IT index stands alone in the weakening quadrant, indicating a critical juncture that needs close tracking. Lagging sector asterisk while several sectors are positioned in the lagging quadrant, it is encouraging to note that nearly all are witnessing momentum gains, with the exception of Nifty Private Bank, Nifty Financial Services, and Nifty Realty, which show weakening relative strength. Conversely, sectors like Nifty FMCG, Nifty PSE, Nifty Energy, Nifty MNC, Nifty Pharma, and Nifty Media are starting to gain momentum and relative strength. Improving position asterisk the Nifty PSU index has transitioned from a lagging to an improving status. The Nifty Auto sector is also in the improving quadrant, but with decreasing momentum, a cautionary sign. Leading sector asterisk the Nifty Consumer Durable and Nifty Infrastructure indices are prominently positioned in the leading quadrant, marked by ongoing enhancements in relative strength and momentum. Nifty Metal and Nifty Oil and Gas have exhibited strong performance compared to the benchmark, contributing to their emergence in the leading quadrant with impressive momentum gains. Stocks to monitor. Anticipated strong performers for the upcoming week include Divis Lab, Fortis, Glenmark, Marico, Mudhoot Finance, Nazara Technologies, HDFC Bank, Infosys, Reliance, and Geo Financial. Best wishes. Shishir Astana.